Hey, welcome everybody. It's been a while since we hung out, and today I want to talk to you a little bit about what I call the yoga of investment. Now, this is meant to be a weekly podcast. I know a lot of people are watching the stock market every day to see if it's going up or down, how their stock changed, whatnot. Well, about the only time we get a little bit of quiet between the storm is on the weekend. So this is going to be a weekend podcast talking about what's happened with the stock market this week. And what I want to introduce you to is what I call the yoga of investment. It's a way that I look at the stock market with my clients where we try to keep abreast of what's happening with the stock market. So we're not watching every day, we're not necessarily day traders. We do like to keep an eye on it, but we're going to take a look at what's been happening this week, this month, this year, and the 5 years. Now, if you're like most people, you're very concerned with what's happened to the stock market today, but most of the time, day traders tend to lose money and don't perform as well as people who buy and hold. Now, that's not the only strategy that works out there. And in fact, I know some other strategies that work much better, which I'm sure we'll talk about in another episode. But for today, we're going to talk about the calm within the storm. When we look at the big picture, we look at the 1 day versus the 5 year, we'll start to see a difference. Now, if you're a long-term trader, what's happened with your portfolio over 5 years, or an investor, I should say, what's happened with your 401k, your retirement accounts over the 5 years is usually more important than what's happened over the 1 day. So remember, even though the 1 day is important, the 1 month is important, the 1 year is important, usually we're looking for a good 5-year outcome as well as hopefully other outcomes. But sometimes different things are happening in the world, different events are happening, the market's up or down at any given day. That doesn't necessarily mean you should go out and sell or go out and buy, depending on what the daily movement is. So today we're just going to talk about what the major indexes are, why we look at them, and what's been happening recently. So the first major index I want to look at is the oldest of the most closely watched American indexes, is the Dow Jones Industrial Average. And the Dow Jones Industrial Average we've been watching for some time. It's actually been around for about 141 years, going all the way back to about 1885. And it was founded by two men. Can you guess their names? Charles Dow and Edward Jones, famous for having founded not only the Dow Jones Industrial Average after the Civil War, but also the Wall Street Journal, a name you might have heard about. So let's take a look at the Dow. A nickname for the Dow is called the Dow 30. The reason why it's nicknamed the Dow 30 is because there's 30 major stocks that the Dow watches. Now, as we can see in the Dow, and by the way, if you want to learn more about the Dow, you can always go to Wikipedia, the source of all knowledge. 1 day, we can see it's down almost 1%. Oh my goodness, that really sucks. If you had $100,000 in the stock market, you lost $1,000 today, or $950 since it's 0.95%. But let's not panic yet. Let's see how bad the 5 day was, or the 1 week, since there's only 5 trading days in a week. That's why 5 days. All right, it's down 2.65%. Oh my gosh. So if you were in the Dow and that's what your portfolio was in, you could have lost $2,650 in 1 week. All right, the next 1 month that we're going to take a look at is, okay, the Dow Jones is down 5% for last month. What do you think? What's happening in the world that's made the stock market take such a downturn? Well, a few things might be happening. One of the biggest things is probably the war in Iran. So it's creating a lot of uncertainty right now, and a lot of people are moving their investments. Well, at least that's with the Dow. That's the theory we're going to go with today. Let's take a look at the 6 month. Okay, good news. At least the 6 month is up 4.36%. Not too bad. For half a year, the market being up 4% is not too bad. A lot of people think 8% is a typical stock market year. Let's see if the 1 year is any better. We're going to go to the 1 year. So from this time, March last year, March 5th to March 5th this year, more or less. Okay, hey, it's actually up 11.5%. So good news. if you've been in the stock market for the whole year, at one point you might have been up almost 15%, but overall, because it's gone down a little bit recently, now we see it down at 11.5%. So not the worst news in the world if you consider, if you've been in the whole thing, better than putting your money in the bank. Okay, so if you think about it, if you put your money in the bank, you would have maybe made 1, 2, 3%, depending on whatever your bank account does, but you would have done 3 or 4 times better, or 10 times better if you're at a low interest rate, by putting it in the market. So remember, we're looking at long-term investments, investing for retirement, which you may be 20 years off, 30 years off, 40 years off, or maybe 1, 2, 3, or 4 years off. So depending on what your investment discipline is, if it is buy and hold, if you bought and hold and the Dow Jones was what you were into, you could have done that well. Let's look at who's the biggest player in the Dow, by the way. Kind of interesting. If you go to Wikipedia, we'll take a look. It has this handy dandy spreadsheet. Every accountant loves the spreadsheet, right? So let's look at the index weighting. They got all the different companies in here. You can see when they were entered into, when they were added. The biggest, well, the smallest one right now is Verizon. The biggest one right now is Goldman Sachs. So according to the Dow Jones right now, one of the biggest sectors in the American stock market is actually the financial sector. Also followed by tech. You can see Microsoft, and then you see Home Depot, and then Visa and Sherwin-Williams. They got some home improvement and medical. Between financial services, tech, construction and home improvement, and medical, that's about 75% of the American economy, according to the Dow, if you believe the Dow represents the American economy, which some say it should. Well, the biggest player is Goldman Sachs. Let's take a look at how Goldman Sachs did over the 1 year, the 5 year, and how it's been doing recently through the storm. Goldman Sachs, oh boy, did they take a hit today, down 1.68%. Okay, but let's look at the 5 days. How did they do during the week? Down 2.21%. Okay, I'm seeing a trend here. It looks like a lot of the stocks are down right now. Let's look at the last 1 month. Oh my goodness, it's down 11%, 11.5% a month. Gosh, is Goldman Sachs tanking right now? Well, don't worry. Remember, we wanted to look at the 1 year and the 5 year for our overall indicator. Let's take a look at the 6 months. Did we make any money over 6 months if you were a Goldman Sachs investor? Actually, in 6 months, you would have been up 10.73%. So if in the 1 month it's down 11%, that means at one point it was up 22% in the 6 months. So remember, sometimes the stock that's relatively good stock performing well, it might be a little bit more volatile in times of volatility. Let's take a look at the 1 year. The 1 year Goldman Sachs stock made 44.7%. Wow, that's like 3.5, almost 4 times better than the Dow. Okay, but if you were just looking at the 1 month, you might be a little bit upset about Goldman Sachs. But if you've been holding on to it 1 year, you've almost made 44% on your $100,000. You'd be up to $144,000. You might be pretty happy. What if you invested $100,000 5 years ago? Well, according to this, it's been up about 30% a year. If we divide 150 by 5, that's 30% a year. Then you might be up $150,910. So is single stock investing right for you? Well, it depends. Are you going to sell? Is there more risk? Yes, there is. Is it better than indexes? I don't know. Let's take a look at another index today. So we're going to move away from the Dow Jones, which is nicknamed the Dow 30. Now remember, 30 stands for 30 large stocks in our economy. Usually these names have a meaning to them. Next one we're going to look at is the S&P 500. Can you guess how many stocks are in the S&P 500? Well, if you guessed 500, you would be right. These are the 500 largest stocks in the United States according to the amount of market capitalization they have. So to speak, if you wanted to buy all the stocks available to this one company, they would be the 500 ones that would take the largest investment, or in a way you can think about as the most expensive overall to buy that company. These are 500 large companies, not the 500 largest companies overall in the United States, but the 500 largest publicly traded United States companies in the United States. So remember, there's some things that are privately held, government held, things like that. So those are off the table. These are the 500 ones that you and I can buy as investors. So over the one day, the S&P 500 is down 1.33%. If you had $100,000 in the market, you would have lost $1,330. Over the 5-day, it's down 1.24%, a little bit less. So that means the market came back a little bit overall in the 5-day, but it put 100,000 in, you would have lost $1,240. Okay, how about in the 1 month? Down 2.77%. Oh my goodness. Does that mean that we need to sell everything? Well, sometimes they say when you sell, you lock in your losses. So are you a buy and hold type of person? Are you a person that gets nervous when it's down and you think you need to cut your losses? Well, I'm not telling you how you should invest. Even though I am a financial advisor, I'm pretty sure I'm not your financial advisor. Could be if you hired me, but that's another story. This is for entertainment purposes and information purposes only. So let's take a look at the 6 month. For the 6 month, overall, the S&P is up 3.77%. You know, it kind of reminds me, if you're like in a really high yield interest account or CD or whatever, you might make about that much in a year. All right, but if I'm going to take all the risk of being in the stock market, you know, I'm probably going to want to get a better return than just that. So let's take a look at what the 1 year can give us. For the 1 year, we've got a return of 17.45%. Well, that's about 6 times or 5 times what I would get out of the bank if I was in a really high interest yield account. Now, if I was in one of those really bad accounts where they only give you like 1% interest for checking, then, you know, I might be getting 17 times what I would get by keeping it in the bank. Might be worth the risk. Okay, now the next thing we're going to look at is we're going to look at the Nasdaq 100, which is one of the fastest growing indexes, one of the indexes where the most money is being flooded to right now in terms of investment of all the indexes. We're going to take a look at that. And what is the Nasdaq 100? Well, the S&P 500, we're going to move on from that. That's about 70 years old. Remember, it's about half the age of the Dow Jones. So this started in the 1950s. I call this mom and pop's index. You can imagine dads reading over the newspaper. Hey, Margaret, look at this, a new baby born in the world, the S&P 500. No, but you know, way back, you know, 1885, when the Dow Jones was born, that was probably like, you know, grandpa and grandma, or maybe great grandpa and grandma, like, oh, we just won the war with the South. Now let's look what's happening to the industry in the North, the Dow Jones Industrial Average. Okay, now we're going to go to the Nasdaq 100. Nasdaq 100, when did that start? Well, the Nasdaq actually started in just a couple of years after we landed on the moon. When was that? 1969? Yep, that's right. One small step for man, one giant leap for Hollywood production. I mean, mankind. So remember, in that, we're going to look at in 1971. Sorry, and I always like to remember the Nasdaq because it sounds like NASA. It has some of the same things, NASA, but it does have the DQ in there, probably for Dairy Queen, because you know the astronauts, they need to eat soft serve food up there, so Dairy Queen got to get in action there somewhere. But you know, all jokes aside, that's just my mnemonic tricks. Remember how that started? The Nasdaq started way back then. The Nasdaq itself has over 4,000 stocks, close to 5,000 stocks, I believe. It's the second largest stock exchange in the United States, is the Nasdaq. The largest one being the New York Stock Exchange. Now, the Nasdaq started a little bit later in the 70s, as we talked about, and being as it started a little bit later, it's a little bit more modern. I like to think of it as a little bit more technologically focused, especially when we think about the NASDAQ 100, which started right around 1984 or 1983. Hey, if I get the date wrong, don't kill me. Go ahead and put it in the comments below. Happy to hear your corrections. But right now we're going to take a look at the NASDAQ 100. This is 100 very large stocks, the 100 largest stocks traded on the NASDAQ. You're starting to see a trend here, you know, 30 large stocks, 500 large stocks, 100 large stocks. But the reason why this differentiates itself from the S&P 500 is there are no financial stocks included here. So this is 100 large companies, but we took out all the financial sector. Now you remember how good Goldman Sachs was doing. let's see how the Nasdaq 100 is doing. We're going to say that this has a little bit more of a tech flavor because when you take out all those large finance companies, some of the large companies that come in to fill that vacuum are actually going to be the tech companies. So what do you think? Are you feeling bullish on tech? All right, well, let's see. Who knows? Maybe tech, all that AI, is it scary? Is it exciting? Is it both? Let's find out. Let's take a look at the Nasdaq 100, see if we can get that to come up for us. See how that index has been doing for us. Nasdaq 100 today, well, actually, down 1.5%. Okay, well, sounds steep. Let's take a look at the 5-day. Oh, actually over the 5 days, this one's actually been positive. So if you had $100,000 in there, you would have actually made $180 just for doing nothing. All right, not bad for sitting on your caboose. Let's take a look at the 1 month. Oh, but over the 1 month, you would have been down $1,730 if you had $100,000 in there. But remember, if you're like me, you're not really thinking about in terms of 1 month. You're more like thinking in terms of 1 year and 5 year. Let's look at the 6 months, see how things performed. Over the 6 month, we're up 3.71%. Not too bad. You would have done about what the bank did in the year. Kind of reminding me a little bit about how the S&P 500 did in the last 6 months. So what do you think? Did tech underperform or outperform top 500 companies? In general, it's one way to think about it. There are more than just tech in the Nasdaq 100, but if we just want to think about overall, what's a general delta going to be related around? A lot of its difference is going to be tech. So that's why I said it. Let's take a look at the 1 year. The 1 year, it's up 23%, even with this terrible war in Iran. But luckily, I understand that most of the American Iranian population are very happy, and many of the Iranians are happy about what's going on. So our prayers will be with humanity. May whatever is best for humankind prevail. Now in the next 5 years, we're going to take a look at the 5 years. It's going to happen here. My prayers go out to anybody who's been hurt or had relatives hurt in the war. Obviously, that's always a terrible thing. The last 5 years, the Nasdaq 100's been up almost 100%, 94.52. So if you were investing in the Nasdaq 100, you'd be up $194,520. Well, if I put that money in the bank, I might be up $3,000. So risk and reward. Can the indexes go down? Is there a risk? Perhaps, but there might not be much reward in banks. So overall, which is better? Well, I'll tell you what, keep watching this channel. I look forward to getting to know you better and hopefully doing some regular posting where you can get to learn a little bit about the way I look at the market as another option for you to consider when you're looking at the market. All right, take care everybody. Be safe. God bless America, and may peace be with us all. Love you guys, and looking forward to seeing you in the next one. Take care. Bye-bye.
Follow, message us, or scan the QR code on the screen to learn more.